1:15 and marker.
Hey, I'm Rebecca Gordon.
I'm Sylvia Gordon. In this episode, we are talking about MACRA's impact on Plan G
For great.
and Plan F.
For failing.
And it's more confusing than you think, especially when you are leaving employer group.
So stay tuned. To me, it doesn't seem that confusing, but it might just be my simple mind.
No, people generally like MACRA's no big deal. You can't get F guaranteed issue anymore. F is G, G is F, whatever, and people act like it's no big deal. The problem is that we have 50 million people that were already eligible for Medicare Part A and B before MACRA. And those people, those 50 million people, play by different rules, and they play by them forever.
Why don't you explain what MACRA is in the event we have some new subscribers, and they're probably like, what the heck is she talking about?
As of January 1st, 2020, you can no longer buy a plan without a cost share, without skin in the game. So F and G go away, and high deductible F turns into high deductible G. If you are newly eligible for Medicare, you'll be able to get
G.
G. If you leave group, you'll be able to get G. If you leave, you could get, there's other plans, but you can't get F. So all the people that are going to turn 65
after January 1,
the rest of the
will never know
future,
F.
They'll never have a plan that doesn't have a cost share. They'll never have one of those Cadillac F plans where all you pay is your premium, you never paid a deductible or co-insurance copay or something. So that was under Obama. So don't be blaming that all on Trump as much as y'all are all hating. Everybody's hating everybody. This is a long time in the coming, and this came back from the Obama administration to get rid of F as we know it. And I shouldn't say get rid of, because all the people that have it get to keep it. Okay, and everybody's pretty familiar that it's not going away. It's just not available for purchase for newly eligible people. Okay, so now let's go to the part that really gets confusing. And that is, so what is the difference in benefits?
There is one difference. Part B deductible. That's it. And your Part B deductible is an annual deductible, and it's going to $198.
And this is where it gets very confusing. Leaving employer group, let's talk about guaranteed issue situations.
So let's do the example. Your client.
Okay, so Marianne's client, Marianne said, I tried to write, my client was leaving group, losing group.
Just losing group.
It's a really sad story because her husband divorced her at age 80.
Yeah,
I mean, that pulls on my heart. I'm a woman, I'm sorry.
Let's just go to the meat.
She had to get off of her group plan, and she had to get into a plan, and she's not healthy. She's 80. Marianne wanted to put her in a G because we know that G's rates will go up slower than the old F's rates.
Right.
Okay? Well, she can't get a G.
Let me ask you this. What effective date did she want?
She wanted 12/1.
That's key to this scenario.
Okay.
12/1.
She wanted 12/1, and F would be her guaranteed issue option. Or, like I said, N, I love N, but she wanted a G. She couldn't get a G because she couldn't pass the health underwriting. Now, she called the carrier, and she said, hey, I thought I could get G. I thought G is guaranteed issue. And they said, it is guaranteed issue January 1st and forward, right?
So she was stuck.
She wants a 12/1.
In a 30-day limbo.
So now let's say somebody wants a Plan F. And we keep talking about how you can't get Plan F. But that's not really true.
You can get Plan F if you're eligible prior to 1/1/2020, turning 65.
So there's millions of people
who have been working, and they're 75.
They haven't retired yet. They're still working. When they leave their group after January 1st, and their Medicare Part A effective date was prior to January 1st, they can still go get a Plan F.
And what do you think we're going to see in the market this year? So that's a new twist for all the med
So let's go to the next slide.
What do we think that carriers are going to do?
So this is the crazy thing. So this shows you Plan G's rates have historically gone up much lower, slower than Plan F's rates, right? Because Plan F was guaranteed issue, and it had to take in a lot of people that were high risk, that were sick.
It was an awesome plan.
So if you were healthy, you wanted to get yourself attached to a G so your rates would stay low. You were in a healthier block and you would go up slower. Now that's why I said that reverse card. Think about G the way you thought about F and vice versa. Now that G will be guaranteed issue, it will go up faster And the new Fs that are starting fresh with brand new business, since it'll have the protection of underwriting, they won't have to take all the sick people. The new Fs will go up slower than the new Gs and the old Gs. So the new Fs aren't here yet. Those will be the Fs that haven't filed until 1/1. And we know that there will be new Fs and
New blocks.
new Ds that come in, brand new blocks of business with nobody on them. And that is where you want to look to put your clients, your healthy clients, in 2020.
Woo! I'm
So,
exhausted.
MACRA does seem kind of easy. So when you're talking about your guaranteed issue situations, it does get a little more complicated. If you have questions, ask us in the comments. Do you have a question?
Well, I do. I have one question because some agents have reached out to us for our question of the week, and they want to know how many agents were cross-selling during AEP. How many of you were selling dentals or hospital indemnities?
Because most agents don't. They
Right.
always say, I'll go back after
do it later.
AEP and do it later.
I'll do it later.
How many of you actually incorporate that into your sales presentation and talk to your clients during AEP
Let us
and
know.
do cross-sell dental, vision, hearing?
And why can you do
Short-term.
that? I thought you weren't allowed to talk other products during the sale.
Right. So a lot of agents are under the impression that they can't do it. And of course you can. You can cross-sell health products. You can't cross-sell
A life product.
life, long-term care annuities. So did you? Let us know in the
Let us
comments.
know.
Thank you for joining us. We'll see you next Wednesday.
See ya!